It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Welcome back. You know who this is. I know who this is. And I am so happy that you are here with me. It's Tyrone Jackson, the wealthy investor. Thank you for joining me for yet another episode of Trading Stocks Made Easy. At WI Trade School, which is where you can go and follow my trades and ask me questions on a weekly basis, that's the online version of the Wealthy Investor program. I get a lot of questions, and one of the things that's interesting being a teacher is you wind up hearing the same questions over and over and over again. So in this particular episode, what I thought I would do is take some of the most common questions that I am asked about investing and trading and make them part of a podcast. So I'll be answering those questions for you right here in this episode. But one of the things that I really wanted to talk to you about is having money to start trading, because that's the thing that people ask all the time. It all seems so complicated. Where do I go to actually open up an online brokerage account? So why don't I start off with that? One of the things that allows me to talk to you and for you and my students to kind of follow my trades, my methodology, my approach, if you like them, is a little something called the internet. Or, as some people still refer to it, if you're a little bit older, the interweb, which I hear a lot of that going around. Prior to the internet, you would need either a family relationship or someone who was at a brokerage house or a discount brokerage house who had a relationship with your family to kind of guide you through the stock market. You know, I tend to speak in very simple terms, which I call the Sesame Street approach. Essentially, the stock market prior to the internet was the playground for the rich. One of the reasons that it was the playground for the rich is because prior to the internet and being able to go online to research stocks, you would have to watch them. If anybody who's a little bit older, you remember you would open up the newspaper and there'd be this long section with all of these stock tickers, and you'd have to follow your stock day to day in the newspaper to see whether or not it went up or down, which is so ironic because today you can just use, there are 1,000 apps to put on your phone and you can follow your favorite stock. Well, that's pretty intensive, and that's certainly a commitment. And back then, you would need someone called a financial advisor or a stockbroker who would say, I think this is the best stock to own. This is the best stock to own. So it's hard to get rich if you don't even have access to information. And what I always like to say, thank God Al Gore created the internet so that we all have access to this information. It's a very, very powerful time. So if we have access to information, we have access to go in and out of stocks, to trade and invest, and we can do our research for free on the internet. And that is really amazing, which means that anyone who has $500, $600, or $1,000 can go to eTrade.com, TDAmeritrade.com, CharlesSchwabFidelity.com, and online open up an online brokerage account. When you put money in that brokerage account, that's called funding that brokerage account. And generally speaking, what happens after your account is funded, you then have a username and password like so many websites have, and then you have access to buying and selling stocks. Now, the downside of all of this access is that you can get yourself in a lot of trouble buying things with no financial education. So I do not like buying stocks that are under $20 per share. And the reason is because those stocks generally don't have what we call institutional involvement in them. I refer to that in the Wealthy Investor program as big money. So the banks, the institutions, the college endowments, the hedge funds, these are organizations that can buy 1 million shares or more per day because they have the funding and they have these large extended lines of credit. So we really want to be in the stocks that the large institutions are in. That's how, if you use the wealthy investor approach to the market, that's how we profit, because we kind of go where they go. And when you're buying 1 million shares at a pop, guess what? You want your risk to be low of the stock dropping, and you want the highest probability of stocks rising. So this is why I love trading and investing, because if you have a particular method that stood the test of time, guess what? You don't have to be a genius to always be following in the footsteps of institutions. So how do you open an online brokerage account? You simply go to TD Ameritrade, E-Trade, Fidelity.com, fill out the paperwork there. Another thing that I find when people are actually opening a brokerage account is they never want to ask questions for fear that they look ignorant, stupid, or out of the know. And I just want to clear something up right now. When you're entering the world of wealth, you have to be humble enough to realize there are going to be a lot of things that you don't know. But you gain a lot of knowledge and information by asking questions. And all of these online brokerage accounts have people there 24 hours a day to just answer your questions about how to fill out a form and how the software works. So don't be afraid to ask questions. Don't be afraid to not know the answers, because that means that you are learning and growing. And the beautiful thing about life, if you want to live a fulfilling life, is you learn to ask questions so you get more information, more knowledge. Therefore, your world is always getting broader. So those are the questions that people hit me with immediately the most. After this break, I'm going to come back and give you a series of questions that I get at witradeschool.com or via email or any of my online teleworkshops and seminars. And I thought I'd answer some of the frequently asked questions right here on Trading Stocks Made Easy. Back in a moment.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, WealthyInvestorRadio.com.
And welcome back. Today, on today's episode, I'm answering some of the most frequently asked questions about the stock market that I get. Now, obviously, I've narrowed them down to the ones that come up with the most frequency. I'm sure you even have greater questions about the market. But let me just jump in with some of the ones that are down here. How do you know? Because this is one I get all the time. I've opened an online brokerage account. Now, how do I know what stocks to start with just for investment purposes? So listen, there are 100 ways to start investing. And as I always say to my students, the stock market is one game and literally 100 ways to play it. You can play as an option owner, a stock trader, a stock investor, a dividend capture person. You can do that. There are a myriad of strategies. But if we were to make it very, very simple, I always start with one of two things. Companies that you are familiar with, because those are the companies that you're going to feel comfortable doing research on, and stories you understand. So, for example, you look at a stock like McDonald's, which is MCD, right? If you've ever taken your kids to McDonald's, if you've ever driven past a McDonald's, if you've ever had a McDonald's shake, it is a product that you are familiar with. It is also a member of the Dow Jones Industrial Average, those top 30 stocks that are considered the best of breed in the U.S. stock market. They have stable earnings, and these are stocks that probably are not going to go to zero in the next 52 weeks. They make billions and billions of dollars. So if you chose from the Dow Jones Industrial Average and you started investing in names that you know, that is a good way to get going in the stock market. That way you feel connected to the companies that you utilize the most, instead of some software company that you keep hearing is going to be really, really, really big. McDonald's, Coca-Cola, AT&T, Home Depot, Nike, these are all companies that are part of the Dow Jones Industrial Average. The next question that I get very often, because of the nature of the show and what we talk about, is covered call writing. Can you explain what a covered call is? Yes. A covered call is essentially buying some shares, and you're willing to sell the rights to your stock at a higher price. And the price that you're willing to sell it at is called the strike price. So imagine buying something and being able to sell the rights to those shares at a higher price, which means the person's going to buy the shares away from me at a higher price, at the higher strike. And whether the stock reaches that higher price or not, I get paid. I take in money for selling those rights. Some of you who are a little bit more sophisticated, you know that I could sell those rights on a weekly basis now, a monthly basis, or a quarterly basis, but we are moving more and more to daily covered call writing. So what happens is this takes someone who's not very sophisticated. When you look at a trade like covered calls and you like making money every single week or every single month, whether a stock rises or falls, the covered call is very powerful, and it may be something that you want to learn more about because covered call writing is very versatile. I can sell covered calls in my IRA. I can sell covered calls in what we refer to in the Wealthy Investor Program as your cash account, but I can make money on a predictable basis. So I don't have to be a genius. I just have to understand and master this one strategy. Now, down the line, you'll learn about the in-the-money call, the out-of-the-money call, the at-the-money call. There are variations on this theme, if you will, but that is the core strategy that I like to teach, which is why a lot of my students are so successful because it's hard to fail in the stock market when you're selling rights month after month and taking in guaranteed money. But and then we take that guaranteed money and we do a lot of things with that guaranteed money, which is also part of the program. But for those of you who are listening to my guests saying, I love covered calls, that's what we're talking about. The fact that we can do this one transaction in the stock market that is almost like a secret to the individual investor. And we build a whole portfolio around covered call writing in my program. So that's what a covered call is, and that gives you a sense of what it's all about. The other question is I get all the time, which is, have I ever lost money on a stock or trading a stock? And the answer is, are you kidding me? Of course I have. You have to lose money in the stock market to learn how to be successful. So, in other words, there are a lot of people who say failure, which there really is no such thing as failure. It's just another opportunity to learn, another opportunity to grow. Failure shows you what not to do. So have I ever, in the 20 years that I've actually been trading, bought a stock that was under $20? Yes. And I lost money on it. And it was really interesting because when I bought stocks that were over $50, I tend to lose money less. So I am a self-taught trader and investor. One of the things that I actually learned was just do the things that work. For those of you who are actually into trading and investing, you'll realize after a while, there's like this statistical approach to how often do I sell something for a profit? So that statistical approach is how often am I right? How often am I making money? And what I learned to do statistically was just do the trades that make me money 90 to 95% of the time. Wealth is a series of positive habits. Well, if that's really true, then why don't I just engage in the trade or trades that are successful for me 90 to 95% of the time? And you know those trades where I fail? Are you ready for this? Just don't do those. And that is part of the philosophy that I've developed. So of course I've lose money. So someone's going to ask, yeah, but what about a stock over $50? Have you ever lost money on that? Yes. But this is where statistics and averages get really interesting. As long as on a monthly basis, I am making more money than that occasional loss, I am fine with that. So there are companies that I might invest in, or there are companies that I might buy as a covered call or try to do something called volatility trade, quickly sell it. That trade doesn't work out. Even if I sell at a loss, one of the things I teach my students to do is always go net positive. So when the month is over, as long as I deduct my losses and my gains are greater, then I'm happy, because most people who put their money in a mutual fund make nothing in a month. So, following this philosophy that I actually teach using covered calls as kind of like your cornerstone, it's a great way to build wealth quickly. When I say wealth quickly, I mean within a 2 to 5 year period, you now have this portfolio that just kicks you money every single month. The other thing that I wanted to mention about covered call writing, to be consistent in the stock market, you have to be willing to be bored. You have to be willing to do the same thing over and over and over because it works. And that makes trading not always that exciting. So this is something that I hope that you begin to think about, because there are a lot of risky and sexy strategies out there. But the thing that's really going to grow your money with consistency, in my view, is something like covered calls, because it is predictable. So yes, I lose money still, but my gains are always much greater than my losses, and I'm happy with that. Okay, let's move on to the next question. What are the best stocks to trade in a retirement account? This is a great question, and I get this with frequency. There's a psychological aspect to actually trading and investing, and we tend to look at our retirement accounts as if there are money in our security for the future. So if you start losing money in a retirement account, there's an emotional reaction to that. You know, when you are trading and investing, one of the things you have to learn how is to control your emotions. If you buy a stock for the long term and it starts to go down in your retirement account, emotionally, because we're human beings, we're going to react to that. And emotionally, you may start to feel like, oh my God, I'm doing the wrong thing. That stock is declining. Okay. Whereas if you just give your retirement dollars to someone else and you don't have a username and password, you can always blame them. Oh, that person put me in these bad investments. Well, there actually are ways to manage your retirement account. And I'm not telling you that you should like what I'm doing. I'm not saying that the stocks that I cite here in this podcast, you need to run out and buy them. They're not recommendations at all. I'm just mentioning these names for teaching purposes. One of the strategies that I like, which you do not have to follow, is just staying in Dow stocks in my retirement. Now, anybody who knows anything about the Dow Jones Industrial Average, you know that those are the top 30 stocks that have the lowest risk but steady revenues. And if I'm going to trade and invest in my retirement, I'm only going to use those stocks that are established. There's a strategy I teach called the sweep, where I take the top performing stocks in the Dow and I use covered calls to rapidly and consistently grow my retirement dollars. And it is just an amazing strategy. And this sweep strategy that I teach, I'm probably going to wind up doing a webinar on it because I really want people to know that you can see your retirement account dollars grow very, very quickly. And that revenue that grows is actually tax deferred. And what that means is the money that you're generating on a monthly basis with covered call writing using the sweep, there are no taxes on, right? Until it's time for you to retire. So I teach people how to get tax deferred retirement dollars. And there's a play on your retirement account where I teach you how to get tax-free dollars. But you got to master the first level of the strategy. So see, what happens is trading stocks really can be easy. Or as a friend of mine says, everything is easy when you know how. And then the other question that I really wanted to get to, because a lot of people ask me, how do you set goals? Right? So if covered calls, for example, gives us predictable income, how do you set goals? Well, remember, in the stock market, when it comes to monthly residual income, you want to get consistent first. So if I teach you a trade that makes $500 a month for you, right? We want to stay at the $500 level for a designated period of time. And then we want to increase that so that we go to $750 and we're consistent on that. And then we go to $1,000 and then we go to $2,000 and then $3,000. But the goal is consistency. I know that you could be reading someone's blog and they're like, I make $24,000 this month. Yes, but the question that you need to ask is that a consistent $24,000? Is that a consistent $7,000? So as a trader, your goal is to learn a strategy that consistently allows you to hit a certain amount. And then we build and put another strategy on that. And so that these numbers just start to get higher and higher. And I refer to that as exponential growth. Now, if you are at all inspired by anything that you hear on this show, I want you to remember this, because this is big. I fell in love with stock market trading 20 years ago. It's very, very seductive, and you start to learn things. I started to learn things about the market. I started to learn the money language. I started to learn how many people were, making $1 million a week on the institutional side. And, although I didn't immediately say I want to make $1 million a week, I knew that if I stayed disciplined, that the stock market could be a big part of my life. The internet certainly wasn't going anywhere, so I have access to Wall Street for the rest of my life. Well, guess what? You have access to Wall Street for the rest of your life. You have access to being able to do research online. You have access to managing your retirement account just as well as a so-called professional. What you need to do all of that is something called a financial education. And that's what I help people with at the Wealthy Investor Program is how do we start getting the education that we should have gotten in college and high school, which is to learn a little something about investing. People wind up coming to me so that I can break it down into this easily understandable language and then slowly educate them and increase the language and increase the trades so that trading becomes fun and just a part of your normal life and lifestyle. So those are some of the issues that I really wanted to share with you today on this podcast. I hope that you've found some of them helpful. There's nothing to be afraid of. One of my favorite quotes I get from people all the time when I'm doing workshops and seminars on and offline, someone will always say to me, I'm really bad at math. Well, I always say to them, if you went to the 4th grade, you could be rich, because that really is the truth, because all financial success is really addition and subtraction. And then we marry that with strategies. So those are my tips for the day. If you don't understand something in this podcast or you'd like to hear it again, simply go back and listen again. But next week's episode is going to be really, really fascinating. So if you're listening to us on iTunes, make sure that you drop a review and subscribe to the show. That way, what? It's automatically downloaded to your handheld device, your laptop, or your phone. And I never want to be too far from you. All right. If you are still a little confused about anything that you've heard here today, make sure you go over to thewealthyinvestor.net, download the free ebook. That really will introduce you to some of the terms in the stock market that you'll need to know to kind of get started. That's thewealthyinvestor.net. Download that free ebook. You'll become a part of my community, and then I can send you even more free information on the market, my favorite stocks, and various strategies. This is Tyrone Jackson, the Wealthy Investor, saying thank you, thank you, thank you. As always, I am honored that you would decide to spend this time with me, and I look forward to seeing you real soon. Happy trading.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.